We have just witnessed one of the largest post-election pumps ever, but now is Wall Street starting to dump it. The largest dark pool transactions we've seen in quite some time have just come through. And in today's video, we need to talk about 6,000 on the S&P, the big Russell 2000 hit to our resistance key level, and of course, whether Europe is starting to show weakness, a huge head and shoulders on the German DAX. That and yields coming up ahead of the inflation reports. Guys, this will be a good one. Don't go anywhere. We'll see you in a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. So let's get into it straight away, and remember to subscribe if you love markets like we do. Let's first begin with the post-election pump. We're now trading at 22 times forward earnings, and this takes us into the danger zone. Yes, we have disconnected fundamentally a little bit, but we'll talk about why that is in just a moment, because really Wall Street is playing catch up now to some of the big stories that are probably going to come through in 2025. Now, you may know that the 25-year average is 16.4 when it comes to overall earnings. But what you might not know is that Peter Lynch has a bit of a theory. EPS doubles every roughly 8 to 9 years, and overall, we tend to see the S&P doubling over that time as well. Now, you may know, though, that we're starting to disconnect a little bit from EPS, and this puts us into the critical danger zone. Of course, eventually EPS does play catch up, but when Wall Street starts to get too excited, we go into what we call the Goldilocks zone, a period of time where everyone is suddenly bullish, everything goes great, and of course, we have to put the blinkers on and say, well, wait a second, should we be concerned? Now, Wall Street hasn't played catch up, or they are starting to do this in terms of flows, to the expectation of a 15% overall tax on corporations next year. Yes, that's down from 21%, and it's expected to benefit consumer discretionary 6.8% and an overall benefit to the market at 4%. So inherently, this is going to be pretty good for the markets. And it's got a lot of these Wall Street boffins going very upbeat when it comes to the markets. We've just seen the first 7K handle. That's right. People are now predicting over the next 12 months what we're going to hit 7,000. And by the end of the year, most people are now forecasting 6K. But no duh, we're already at 6,000. Of course, we think that 6,200 is possible by the end of the year. And we also believe that 6,800 is certainly possible next year based on similar bull market cycles. Now, is everyone just getting carried away? Well, of course, Goldman Sachs haven't got there yet, but you're going to see upgrades from all of these big companies across the board. But at the same time, it looks like Berkshire Hathaway and Warren Buffett are worried. $300+ billion in cash? What's he doing? Well, in the last video, we talked about this. And of course, we believe that Warren Buffett is holding early for what he sees as a big problem in the economy. Probably he doesn't like the valuations, fair enough, they're way too far above medians, and he doesn't work on timeframes like most of us do. We're not usually looking at days into weeks into months, whereas he's looking years and years ahead. Now, is this completely ridiculous? Well, he's done it before, and he did it before the global financial crisis. In fact, he was 1 to 2 years early when he cashed up 25% of his fund. This time, he's actually got more than 25% in cash. So it's something to watch into 2025. And we believe that, of course, that year is going to be the most pivotal for all of us as traders and investors. Make sure to subscribe. We'll be sharing some amazing data. Now, we mentioned that the DAX is starting to weaken. Yes, the German market, the FTSE, so many markets are weakening. Possibly it's the threat of tariffs, who knows? But in general, we're seeing a left shoulder, head shoulder, right shoulder. So an overall head and shoulders pattern potentially setting up. And we do need to watch these lows, because if these break to the downside, could it be showing us that we need to be a little bit more concerned about the US market? Well, let's take a look at the US market. Where do we like the valuations? Well, of course, we know the mega cap's trading at 28.5. That's not the highest, but it's certainly high. We know the S&P 500 overall is trading at 22, which is certainly up there. And we know that small caps usually mimicked the S&P 500 in the past. If not, they were more expensive. Guess what? They're not right now. So small caps becomes the focus with these corporation tax cuts. And of course, we've seen strong breakouts, whether it's the S&P 600, which a lot of us were focusing on before the election, or it's the Russell 2K. Everything looks kind of good. And this takes us to the post-election pump period. Remember, a pump before inauguration where we tend to see the dump. And what that's telling us is that any pullbacks at this point could be met by strong bull demand. Let's now move over to the post-election pump from the Russell 2K. Again, whether it's 2016, right now, or of course 2020, we still see that the Russell usually does well. And that's because, of course, we've got the tax cuts and, of course, the rollover of the previous tax cuts. So let's take a look at IAWM after it gaps up 5%. Is this bad? Well, no, it's back in line with everything we've talked about in terms of the stats. 80% of the time in similar reads, we've seen some big strength. And while we don't have too much data for that, it just goes in line with everything we've been discussing. A 3-month run with no recession into the US election, 2 week prior having an overall pretty good return. And of course, that leads into a 100% read over all of the period since 1900. And this is just not what you usually see leading into bear markets. ARK Innovation broke out, showing that people have a bit of, I guess you would say, capacity now to buy companies that make no money. And it looks like there's going to be a decent amount of rollover of debt in 25 and 26 that Wall Street's betting on these companies being able to get. Market cap and market cycles seem to be right in the middle. We'll, of course, alert you if things look different here. And in general, Bitcoin is doing the same pump post-election that we've seen ever since really Bitcoin's really been traded. At this point, do we see the top of Bitcoin just yet? Probably not, though it could be a temporary top, as you'll see with some of these dark pool activities. So let's go into the big trades. Coin, of course, we reported in our previous video, finding resistance and then getting some sell-offs. We'll look here at Ethereum. The big trades of last week got obviously taken out because people said, you know what, that's a pretty damn good gain, a 2 times leveraged fund. And we even saw Tesla getting a couple of large transactions of it. So since people took profit, and this was some massive profit, so I don't blame them for doing so, getting in probably at the 14s, getting out at 22 for this particular 2x leverage fund. We also saw some decent moves happening in China recently, and obviously we've seen the pull down here underneath all this FOMO and take profiting zones. Will we see large transactions start to appear again? A lot of that's going to come back to earnings, which of course we will be watching over the next coming days because we are still in earnings season and we're about to see Tencent, JD, and Baba come out with their big earnings. So a lot of stuff occurring there. So let's take a look at the S&P 500. It hit our core wall at 6,000. And as you guys know, this is a big level. We've seen the advanced decline line come down. And really it comes back to options. But if we do fall, how much could we even go? Well, not much probably. Daily 20 has been a good bounce in recent times. And that sits around the 5880, 5900 level. But one thing has become clear. As soon as the market goes down, what we're seeing is puts everywhere. And while we know that the core wall at 6,000 is massive, look at these puts that have appeared over the last 24 hours. Basically speaking, 5,900, 5,920 remains what I believe would be a huge put wall should we actually see the markets come down to those levels. And it just seems like everyone is too willing to put puts into the market. So it could be that Wall Street want to climb the wall of worry. From NVIDIA's perspective, 148, 150 is still the core wall, and Tesla will need to get above 340 to really activate strong moves once again. You can see here it's now underneath the major call strikes of this week. When we look over to the lead indicators, the high yield junk is just coming back to where we suspected. No real problems, could go a little bit lower first. The bonds market overall doesn't seem to be freaking out based on our indicators, and the US 10-year is really the major question. No one's been looking at yields, but they have been rising up. Will they break this trend line? That could be a concern for markets and, of course, cause further shorting. Copper is looking terrible. Iron ore is obviously holding steady, and China has been dropping. Now, will copper go lower first? Well, we're thinking maybe 406 at this point, and there's no reprieve yet for that metal. So, of course, that could mean that China's going to our magical 61.8 fib in just a few days. US dollar, still strong. Nothing to really report here. And gold, looking for the weekly 20 moving average. So second bull zone, hopefully coming in soon. US oil, confusing as usual. At the moment, post-election, we've seen mostly weakness, little bit of strength over the last 24 hours. But a day trader may try to buy here and place stop below the low and go towards this movement up here. We'll see whether that works. It's a little bit gamblery. Tesla, as we said, no real technical charts other than resistances and stuff. And we saw the doji. We now know there's dark pool activity. We need to get back above 340. NVIDIA just needs to crack 150 to get going again. And we think overall probably 175, 180 into the future. Arcade pullback possible, obviously to fill gap. Overall still looks pretty bullish. hypergrowth looks really nice. And even if we look at something like the biotech industry, it still had that breakout. So these pullbacks are probably going to be met generally by bull demand. Again, the markets are still leaning towards this bullishness. What doesn't look bullish is when you look at the FTSE 100 and the DAX. I encourage you to go have a look at the FTSE. It's broken to the low, but still on support. And you can see here, German 40 is showing a head and shoulders. Does it show us something about the future of the markets? We'll have to keep watching, but I have set an alert there so we can follow it. HSI 61.8 fib looking at 19.5 ideally for this particular market, and US 2K hit our resistance. So could it go to 23.20, meet the daily 20 moving average? That seems possible, but even if you're holding it long, I wouldn't make too many major moves. I think the market looks pretty good. Same with the NASDAQ, a couple of days of sideways, again taking a breather and allowing people to load those puts. Ethereum is the same. We see a huge transaction up here in 2x funds. But overall, of course, the market has been very bullish. Even if it pulls back, we do expect buyers to come back in. And the same goes for Bitcoin at this stage. Kind of in uncharted territory. How low could we go? Well, it really comes down to a liquidity question that we've got. And I will be updating you on the next 24 hours once I investigate it further, because liquidity could be showing some signs of weirdness for the crypto market. All right, everybody. Well, as always, check out the major news coming forward. We do know that we've got the CPI at 8:30 a.m. These may be used as excuses. Again, I wouldn't read too much into them. PPI on Thursday and Friday, we've got core retail sales. As always, we'll be covering the results of those and what we think about them. But as general, follow the price action. Don't be too concerned for now, but of course, have a healthy level of skepticism into 2025. And as we know, Buffett's holding and I cash, and I wouldn't pay no attention to that. I certainly would be looking at it. All right. Remember to subscribe, smash that like button, follow us on X, follow us on LinkedIn, and of course, check out our 7-day sale. Thanks so much for watching. Bye for now, guys.